Hi guys, I think this will be video number 3 on the budgets, and I think this will be the last video that we're gonna do today on the budgets. And this one we're taking it from the Limpopo 2023, from the Limpopo Prelim paper for the year 2023. In this paper, they wanted us to do a creditor's payment schedule. Remember, in the first paper we did a projected income statement, and the next one we did a cash budget, and it had a debtors collection schedule. And the other aspect that we need to look into is the creditors payment schedule. So we're just going to do the creditors payment schedule and see how far we can go with this one. All right, so we're going to go again to question number 4. I think you'll find that most of the papers we're bringing this question on question number 4. So let's go and see what was on this paper. 4.1. Complete the creditors payment schedule for the budget period ending 31 July. There is the question. So we're going to come here, and you will find that when you are doing your creditors payment schedule, there is a statement that always comes with it, which is information E. The business maintains a fixed stock base level. The business maintains a fixed stock base level. Stock sold in a month is replaced in the same month. What they're trying to tell us is whatever we sell is what we buy. So if we want to look at our purchases, we have to come and look at our sales. Our sales informs our purchases. That is what they're trying to say here. Hence, you would then see that after the statement, then they say credit purchases are 40% of the total purchases. All right. Important information as well is your information D, which says goods are sold at a markup of 80% on cost. Now, if you come here, you will find that in the month of July, we did not have credit purchases. Remember, in the debtors collection schedule that we did earlier on, we also didn't have credit sales, and we had to calculate that amount. But here we don't have credit purchases. So the same principle that we applied earlier on can still be used. But in this case, it's going to be a bit longer. Let's see if we can do that. Let's see if we can walk and come to this figure. All right, so what we need to do here is to get our credit purchases. But for us to get our credit purchases, let me see if I can just get my board here. I'm just going to see if I can get some space to write on the board. Okay, there we go. So what we are given here is our credit our sales, our total sales rather, because what we want to get is the cost of sales, but we are given sales in this case. Remember, we are told the business maintains a fixed stock base level. And if you come to your answer book, the amount that is missing is for the month of July. So we would come to the month of July 2023. And when we are in July 2023, our sales are 990,000. That is our sales there. We want the cost of sales for this amount. We know once we want the cost is 100. So we want the selling price therefore is a percentage. And here we're told the markup is 80%. So we would say 100 over 180. We punch that in the calculator, and then we should get 550,000. This therefore becomes our cost of sales. Cost of sales. We are told that credit purchases are 40% of total purchases. So the examiner could have given me cash purchases, that cash purchases are 60%. I would still have said 100 minus 60 to come back again to the 40. So here I'll come, then I'll say 550, multiply this by the 40%, and then I will get my 220,000. So once I get my 220,000, that should be my answer here. That is 220,000. That is my credit purchases for the month of July, 220,000. All right. Now, The next part, remember to show calculations. Remember to show calculations. Always tell my kids, you have space on your answer book. Please show calculations such that the examiner can see where you are coming from. Whoever is marking your paper can see where you are coming from. Now we need to collect. We are told, we need to pay. Here we are paying. Creditors, we are paying. So we are paying 50% in the month of purchase, 35%, and then 15%. So this pattern looks very much the same as the debtors. So we're just going to use the same formula we use in the debtors. That is to say 1, 2, 3. So we're going to come here, and then we are now going to say, because it is in the month of purchase, so we're going to come to July, so it's going to be 1, 2, and then 3. So we're going to need our calculator in this case then. And then we're going to start punching some figures. Let's go. We'll now say, we'll start with the 1. So we're going to say our 220,000. I'm going to write it up here. It's going to be 220,000 because that is what we have here. 220 multiplied by your 50%. That is number 1. You can see that. 50% multiplied by 7% discount. So we're going to pay 93. Multiply by 93 over 100. That will give me 102,300. 102,300. That becomes my July. Let's go to June. In June, it is number 2. Number 2 is 35%. So I'm going to come and then I'm now going to say how much was the purchases? 212,000. So it's going to be 212,000. 212,000. Multiply that by 35%. All right, and then you will get your 74,200. Then lastly, number 3, which is your 15%. So I will come and I'll say 196,000. 196,000. Then I multiply that by 15%. This should give me my 29,400. And then remember to add all your figures. In this case, we end up with 205,900. 205,900. Okay, at times they would want you to take this amount to the cash budget. Don't forget to do that under the payments section, payments to creditors. At times the examiner would want you to do that, so please be watchful of that. Let's go to 4.1.2, and then it reads, calculate the amount of the loan. You can see that this question has come in different forms now. At first, it was with a fixed asset. We were talking about depreciation, and I think we did it on the loan, interest on loan, and we also had a fixed deposit. Remember, the one that matured, and then we wanted to know how much is the interest. Now here we're calculating the amount of loan. Amount of loan. How much of the loan did we receive? You can see here in May there was no loan because the interest was 0, so we had no loan in May. But when we come to June, we now see interest on loan in June. That means we've received a loan. All right. So now we want to see, it says the business has negotiated a loan which will be received on the 1st of June. Interest at 14% per annum is payable at the end of each month. All right. Commencing from the 30th of June, which is this month over there. All right, so several ways of doing this. I'm just going to jump straight to the answer. If your interest is 3,500, you simply take your interest, which is 3,500, and you multiply this, okay, by 12. You multiply by 12. All right, then let's see how much you're going to get. So you're saying your 3,500. Make sure your calculator is close. Your 3,500. Then you multiply that by 12, and you get your 42,000. 42,000. And then you divide that 42,000 by 14%. When you're dividing by 14%, you're dividing by 0.14. So you're saying your 42,000 divided by 14%, and then that will give you your 300,000. Okay, let me see if I can just pull up my calculator so I can show it to you. All right, so let's do it again together. So you are simply taking, okay, let's bring this guy over here. So you are simply taking your 3.5, 3,500. You multiply that by 12 because the 3.5 is per month. You multiply by 12, that's how you get the 42,000. Then you say your 42,000 divided by 14%, that's 0.14. 14%, that's 0.14. Then you end up with the 300,000. That becomes the amount of the loan that we have received. Remember, this adjustment, it can also come how much of the loan was paid. So be watchful of that. Fixed deposit, new asset that was purchased, okay, cost price of the asset that was disposed. The examiner can bring this in different ways. Please be watchful of that. Salaries of sales assistants. All right, it reads, the business employed 5 sales assistants, very important, in May and June. All right, in May and in June. And then on the same salary scale. So that simply means if they are on the same salary scale and they're getting 42,000, it will be 42,000, and then you divide it by the 5 of them. That means each guy is getting 8,400 per month. Okay, 8,400 per month. 3 of them. Okay, now it begins to split them now. Then it says the 3 of them will receive an annual bonus of 90% of their earnings. Okay, so it means of the 3 of them, they will first get their monthly salary, which is 8.4. However, they are also going to get 90% of their monthly salary as a bonus. So you simply come to 8.4, then you multiply that by 90%. Okay, and then that will give you 7,560. So in other words, if you add those two, you would see that these guys now monthly, they're getting 15,960 because it is their monthly salary plus the bonus in this month. So these 3 guys in total, we end up receiving 47,880 because it is their monthly salary plus the bonus, which is 90% of their monthly salary. Then the other two, we are told that remember there were 5. So an extra part-time sales assistant, that means the other 2 guys, they will still get their 8.4. Nothing is going to change with the other 2 guys. They still get their 8.4. So if you say 8.4 times the 2 guys, these guys will still get their amount without change. That is 16,800. However, there is a new guy now that has come, and it says an extra part-time sales assistant will be employed. So there's one guy, and then he will receive 65% of their monthly. So the monthly, remember, it's 8.4, but this guy is going to get 65% of that. So 65% of that will be 5,460. That is 5,460. So when we come here on the last column, it's just going to be 5,460. Okay, then we're just going to add for the 3 guys, and then we end up with 70,140. This is what they will be earning now, as the 6 of them, because remember there were 5 initially, but now there's a new guy, so there is now 6 of them. Control questions. It is very important that you guys prepare your control questions. You'd find that there's going to be control in every paper. Control over advertising, control over delivery expenses. So you need to go through several exam papers and see how you must answer the control questions, and also questions where you need to give advice, where you need to give your own opinions in relation to expenses and income. So please look into these questions as well. I want to emphasize, please look into your control questions. Did we over budget? Did we under budget? Was it a good thing? Was it a bad thing? But that all depends on the question that you'll be given. I want to encourage you once more, please look into your control questions. This will be the last video for today, and then we hope that tomorrow we do inventory as well as VAT, as we are now just a few hours away from the final exam. Cheers, bye.